everyone. It's your host, Andrew Carpenter, and welcome to another episode of Fintech. What the heck? The podcast for financial professionals, everything fintech, and the future of data. Today, I'll be interviewing the CEO of CloudQuant, Morgan Slade, along with Intrinio's software engineer, Shawn Snyder, and I'll also talk about blockchain oracles and the future of blockchain exchange technology. My first guest today is Morgan Slade. Morgan has over 20 years of experience as a portfolio manager, researcher, technologist, executive, and entrepreneur in the financial services industry. He is the CEO of CloudQuant, the alternative data marketplace and SaaS research platform. CloudQuant is transforming the alternative data industry by providing a SaaS tech stack and educational research to accelerate the conversion of data to revenue. Prior to CloudQuant, he built quantitative trading businesses at some of the world's largest hedge funds and investment banks. In the past, he served as a portfolio manager for both Citadel Investments and Carlson Capital, and served as global head of equity trading for several of the largest high-frequency trading firms, and was head of statistical arbitrage at Merrill Lynch. Morgan is recognized as an expert in prediction, machine learning, high-frequency trading, autonomous market making, and is interested in the application of AI to systematic trading. Morgan earned a BS and MS in materials science and engineering from MIT.
Andrew, thanks for having me.
Yeah, it's an honor. That was a mouthful of a background. You've got so much experience in our industry. It's a real honor to have you. Do you want to just get started by telling us why you started CloudQuant?
Well, I think it goes back to much earlier than that. I started out studying engineering in school because I really wanted to understand how things worked. And I didn't really have a firm notion as to what I wanted to do as a career. So I explored that in school, all the way through graduate school, but I saw a number of my friends from school migrating to Wall Street, becoming options traders, working for market-making firms like O'Connor and Associates. And I thought, that's an interesting way to apply a mathematical background. Maybe I'll give that a shot. So I started out really trying to solve problems that were, at first not necessarily acknowledged as being a real thing. I started working right out of school for a large systematic commodity trading advisor. It was about the third or fourth largest hedge fund in the world at the time. And we were trading global markets. And I remember visiting with one of my colleagues from school and telling them what I did, for my day job. This person was also, I think they were working for Goldman Sachs at the time in investment banking, and I described that we were using these algorithms to systematically, enter and exit the market, putting on trades with large amounts of capital. Our typical trade size might be anywhere from $50 to $200 million notional. So these are very large trades for a computer to be managing at that point in time. The person, my friend said to me, I'm not really sure that's a real thing. Like, are you sure you're really doing that? I almost didn't believe that this actually existed. So fast forward 20 years, there's really no question about whether computers can help humans to make better decisions. The whole area of data science has sprung up, machine learning, AI. There are dozens of, if not hundreds of quantitative investment managers. There's recommendation systems and all sorts of things that curate our life for us. And they didn't exist, 25 years ago. So CloudQuant is really an acknowledgement of the importance of data and the raw ingredients to making better decisions. And so our reason for existence, which started just a few short years ago, is we want to make sure that people have access to the best information that they can with as low a transaction cost as they can.
Yeah, the transaction costs and the problem of getting data to do all that automation and all that intelligent machine-assisted trading is very familiar to me and Intrinio. Can you talk a little bit more in depth about how CloudQuant actually solves that problem?
Well, if you think about if you think about the data sets that people need to solve problems, most of them are, nowadays, they're getting bigger. They're not necessarily big data sets, they're fairly large data sets. That's kind of a term I came up with, fairly large data set. What does that mean? It's big enough to be difficult to deal with. My kids used to look, when they were little, they used to look at my footprint, and they'd joke about it being, Bigfoot's footprints, if they saw a footprint in the mud. And my wife, always likes to poke fun at me, and she said, that's not Bigfoot, that's fairly large foot. And so that's where I kind of came up with the term of fairly large data sets, because it is big, but not really that big. And so, at the end of the day, these are things that are hard to move around, hard to integrate, contain a lot of information, but you're not talking about needing to use cloud resources to deal with them. You can still use Excel spreadsheets, you can still use Jupyter notebooks, and some of the conventional tools. And so we really specialize in helping bridge the gap between fairly large data sets and people, is what it comes down to.
Yeah, because if you want to work with those data sets in your models, in your trading firm, going out and finding them and sourcing them is such a pain. That's the whole job in and of itself, getting them into a usable format. And so CloudQuant is, if you're looking to use that type of data to turn it into money, to make profits off of trading, if I were to use CloudQuant, I'm just so many steps ahead of doing the raw research to find that data. Is that the main idea?
Yeah, so we have a full tech stack. We've spun out of an investment firm. We built an entire tech stack to do exactly what we help other people do today. We started out providing a free backtesting platform for crowd researchers, which allowed them to take high-frequency tick data and simulate, or backtest, as we call it, investment strategies very precisely, and then take that into production, co-locate it at an exchange, and trade in the markets with the same exact source code. So that was a mouthful of work that we did. We started out building that with Anaconda about 7 or 8 years ago. And we decided that that's not where we wanted to stop. We realized that most of the value comes from getting the right person in front of the right data with the right tools. And so we acknowledged that there were lots of different ideas in the world about how to invest. And so we invited crowd researchers from 150 countries to contribute ideas. We realized that as we got further along, it takes a really long time. And somebody who's a hobbyist doing it on their spare time probably wasn't going to spend enough time to be engaged enough to get up the learning curve. And so our best audience for this tech stack was probably full-time institutional investors. As we started adding new data sets for our own use, we learned a very valuable lesson, which was really the genesis of why we created this alternative data business. We realized that we wanted to add it was actually a social sentiment data set and a news sentiment data set. This is using a data set using natural language processing techniques, which is a really fancy word or set of words for saying using computers to analyze text and automate the analysis of text. We were trying to analyze news and social sentiment. We onboarded the data sets. We worked as quickly as we could with quite a few developers, and to get it connected to all the different pieces of our tech stack took us about a year.
Oh my gosh.
And we thought, oh my goodness, like how can there are literally millions of data sets out there that might be useful. How would anybody ever have the resources to actually consume them if they're having to do that integration every single time? And so as a result, we ended up with a re-engineering that we did for our platform. We realized that we needed some scaffolding in the form of a data fabric. We needed that to have certain characteristics that allowed us to know a lot of things about the data we're consuming, to federate the data under a single API, to make it point in time, meaning if the data set changes, like for instance, sometimes companies will report their earnings today, and then a year or two from now, they might come back and say, you know what, we're going to re-report our earnings from 2 years ago. we made some accounting mistakes. We know better what the numbers were. Maybe we got in trouble with the SEC or something. We're revising our earnings. So they will stomp on their historical earnings with these new earnings. Now, fast forward, somebody coming out of school who wants to analyze the earnings of that company, they don't remember all these things happened, nor could they if it's the entire stock market is going on all the time. And they pull the data, they get the most recent snapshot of the revised earnings, and they might think that they could have traded off of that information at the time, that the price to earnings ratio would have been X when it was actually Y at that point in time. Our data fabric keeps track of every version of all the data sets, and it only allows you to take a peek at the data when it would have been available. So that if you're a researcher, you can be completely scientific about when you see the data. And it doesn't matter whether it's earnings data or any other data that we have on the platform. We have over 14,000 data sets integrated. And of those 14,000 data sets, all of them can be revealed to the user on a point-in-time basis. That's a pretty powerful concept. Now you've automated a scientific process and made it so that it just comes off the shelf. And so now a new data scientist doesn't even have to think about that. They don't need to make that mistake of using new data versions when it wasn't available at the point in time. They basically are given guardrails to make sure that they're not making kind of some of the common mistakes.
Yeah, they're starting out a year ahead of where you were when you first tried to integrate that social science data set.
And when we integrate a data set, it shows up in our entire tech stack and on a RESTful API. So anybody else with literally a single line of code can query any of our data sets, and whether it's JavaScript or C++ or C#, you use basically 1 or 2 lines of code to get access to all the data. It's all delivered in a very standardized format that's common across data sets, and it's mapped to something useful typically by us on a point-in-time basis, because sometimes mappings change. Maybe companies merge. They now a product that used to be owned by a different company after the merger is part of a new company. And so you need to, if you're looking at product data, you need to map it to the appropriate company at the appropriate time based on when that occurred. So we handle all these things.
Your team is handling the mapping, the security mappings, the making the data point in time, putting it into the API, all these things that you knew were a pain, and then you could solve that for the analyst who actually just wants to test their models. They don't want to spend all that time going back and making sure that the data is clean and organized, integrated, and mapped to the right security.
That's right, and it's a big problem for everyone. We have alliances with some big firms like ICE, Trading Technologies, a number of tier 1 banks and hedge funds, and we're also very happy to be working with Intrinio. And we've got we've taken that 12-month process of integration, and it's now for us to onboard a data set and have it magically be available in our entire tech stack or to any of our clients is typically a 30-minute to a couple hour process.
Wow.
That is revolutionary.
How did you do it so fast? Because we've done some of that same work, and to scale to 14,000 data sets, all these different companies, like what did it take for you to actually be able to onboard that many data sets?
Well, a lot of learning. I've been using data for 25 years and thought that I'd seen all the different types of data that might be out there. No way. There are new types of data rolling in the door every week. But we spent a lot of time thinking, how to scale things, how to automate things, and how to standardize things. And so we have been able to conform most data sets into a standardized format, and we've been able to standardize how we treat them. And I think that's been helpful. We don't tend to do very many manual things around here. Most of the people that work here are software developers, which brings us other challenges. I mean, a funny thing is, getting a software developer or a data scientist to understand what we mean as a trader or an investment manager. And our company is kind of firmly in between the two. We're in between the data suppliers and the data users. There are so many stories of miscommunication between those two different cohorts.
Yes.
And we kind of serve as the kind of universal translator because we have to understand how both of them, speak and use terminology. And so we had to build software that did the same. It's got to be easy to use on the end user side, but it's got to have all the horsepower and capabilities under the hood. So.
Oh. And that is so challenging to get developers to speak a different language or to be able to talk. You almost need unicorns that can speak both the analyst side and the developer side and get them to communicate.
We've got a few of those running around here.
Yeah, I tip my hat to you for finding them. They're incredible, and you can get your hands on them. So our data, Intrinio's data, is in your catalog, and it's awesome to see all these different providers in there. But you've also got this this other portion on your website about data scouting, and you talk a little bit about like some of the expertise that goes into finding these data sets and like how hard that can be. Can you talk a little bit about that part of your business? Like it gets to the unicorn portion of understanding the business needs, helping to connect, get that right person in front of the right data set. How does that work for you?
Well, that is a service we provide. I think the big challenge for data businesses is connecting the data set with what the buyer is looking for. It's almost as if this is how we think about it. Data sets are like raw ingredients. They're like sugar. And the disconnect between what the data vendors and suppliers that we work with to try and monetize the value of their commodity, the difference between what they're selling and what the buyers want is they're selling sugar and the buyers want candy. And they need somebody to be able to take that sugar and turn it into candy. The candy is what they need to actually make money in their day job. And so companies don't find value in the raw ingredients, typically. It takes a lot of work to take and refine that information into something that generates revenue for them. We are firmly focused on making it easier to refine that data, that sugar, and turn it into candy. Our data scouting process involves us getting to know the end user. We have a team of researchers who research raw data sets and generate investment signals from them as well. Those are just another data set for us. So not only do we have raw data sets numbering over 14,000, but we have thousands upon thousands of other signals that we generate based on those data sets. And that number is expanding exponentially, where we actually have taken our research team, our AI tech stack, and created investment signals or predictions of macro factors and other things that might be useful and basically be candy for any type of business. So the data scouting process involves us getting to know the end user, understanding their investment process, and then using our knowledge, having measured the value of the data sets in particular segments of the stock market or futures markets, to find a good matching between the buyer and what the data set provides or what the signal provides.
What a valuable service.
Yeah, so we have white papers that we write. We characterize the alpha content of these strategies. We try and identify how novel the data set is. Is it currently being characterized or represented and reflected in market prices? Or is it something that's still inefficient, that not very many people have access to? And so at the end of the day, we end up getting lots of really great collaborative conversations going with our clients where they share kind of their biggest challenges. And then we go out and try and find a solution in the form of better information for them to make decisions.
Wow. How interesting. Those conversations must be fascinating to know, to find out what they're thinking, what the analysts are thinking, where they're heading, and then to hear their needs in terms of, well, to get there, what kind of candy do I need? What's the flavor of candy that we're going to need? And then you have the sugar, but you've got it in a format that you can convert to candy fast. And because I was thinking earlier when you were talking about those social sentiment signals, if it takes you a year to get to candy from sugar, maybe it's not even there anymore. The alpha might be gone because it's fleeting. And so you have to be nimble. You have to be quick. And thinking about the process of scouting, helping these companies and these analysts get to alpha fast is such a huge advantage. Oh, because if you get to alpha slow, that there's no alpha, right? So it makes sense to me that you have all this data fabric, all these processes to get the data where it can be quickly manipulated, quickly used, and then handed off and traded on, so your clients can make money.
And I think, to your point, like, if you look at the top tier firms, their approach to, finding new data sets, they have full-time people working on that. We work with them, we give them our best ideas. But the other 99% of the world is really where all the opportunities exist. How do we create community? Well, we talked about the backtesting platform we built almost a decade ago. That is one of the primary tools we use to measure the value of the data set, the value of the signal. We backtest it to measure what the actual performance is. We then decompose that performance into a number of different parts. How much of the return came from exposure to the market? And the market just goes up or down. So that's not necessarily something that's unique. That's called systematic risk, a systematic return. That's not what people need. People need what's called alpha, or idiosyncratic return. It's something that you can't buy by just buying the S&P index or some other ETF. So we decompose and measure exactly how much of the return that we generate from this candy is coming from something that's completely unexplainable by something we can currently go out and buy. The only way to actually get access to that return is to buy the data set or the candy and have us help you get up to speed on how to use it.
Interesting. That's a much more sophisticated approach. I've seen a lot of data sets and providers in the market who they're just showing the correlation or the predictive power of their data set, but it's not actually that helpful if it doesn't add extra predictive power to the analyst model. That's a whole different level of value to understand that if there's multi-collinearity in your alpha with the predictive model that the analyst is using, it's redundant. So it actually isn't that helpful. So that's a very sophisticated way to go about it, and I'm kind of jealous. That's cool.
I loved how you used multicollinearity there. That's great. So,
Yeah.
So you're right. If you have something that's highly correlated or collinear with one of the other things that they're exposed to, you're actually harming their predictions. You're harming their performance.
Yes.
And so we really need to focus on novelty when it comes to data. How unique is this data compared to other things that are available? And can you give me a common yardstick for measuring that? So that's what we've tried to do.
Yes, so cool. And I do appreciate the opportunity to use. That's one of my favorite words. So what are you seeing? You talked about there's new data all the time, new data structures. You've been at this a while, and you've seen all kinds of unstructured data and structured data and everything, but you say things are changing. So like can you give me an example of something that maybe folks haven't heard of that is novel, that would be adding new predictive power?
Well, the latest thing that we've been starting to see is, the ability to combine orthogonal alternative data sources to get a more holistic kind of mosaic picture of what's going on in a particular setting for a sector or the economy in general. And so recently we've been working with multiple vendors simultaneously to create a joint candy offering, if you will, of signals. So we've been asked to create signals based on earnings distortion data from new constructs, for instance, with social sentiment from social market analytics. Somewhere in there's going to be a need to understand the momentum, the price momentum of the stock and volume trends and things like that, so we understand the money flow. But at the end of the day, I think that's the future is going to be these kind of hybrid products that are, an amalgamation of several different primary sources of data, but are very good at predicting certain settings or certain things in the stock market or in the investing market. This can be applied to really any business, though. It doesn't have to be just finance. This concept can be applied to ad tech and all sorts of other areas where, in the long run, I'm sure CloudQuant will be engaged.
Yes. Interesting. So it's like not specifically some fascinating new satellite imagery of a parking lot. It's taking data sets that weren't being used together, and when you combine them in a different way, you actually get a different, unique prediction. And
Absolutely.
yeah, you're in a candy store there because you've got all the raw inputs, and you can combine them in different ways that haven't been seen before.
That's exactly
Pretty.
right. The candy store is totally appropriate. I
Yeah.
think that's something that none of us have had before, right? You know, how many people had over 14,000 data sets at their disposal to say, I'm going to pick and choose and mix and match these? The licensing restrictions alone of being able to document all those and get them under documentation where you have the right to do that would be very onerous. That's another thing we do is we have one common license agreement for all data sets. And
Wow.
so, you know, you go through legal, at a tier one bank, for instance, to go through a legal process of documenting a license agreement can take 6 months or more. They only traditionally would look at, you know, one or two data sets a year, even though they want to look at many more than that, and they have the
Right.
time to on the research side. The legal process is so slow that that's been a rate limiting step for them. By federating all these data sets under a common master license agreement, it allows the lawyers to do the job once. They play an important role here, but at the end of the day, there doesn't need to be the same boilerplate language reviewed over and over again for every single data set.
Mm.
And so we
Yes.
do have schedules that are attached to each data set license, but they will have the only kind of exceptional terms that exist for that particular data set. And all the common terms are in the master license agreement. So that's been helpful for a lot of firms who want to move more quickly, but just didn't have the legal staff to keep reviewing all these contracts every week.
Right. What an enormous advantage. If you were born or just got into this industry 20 years ago, or even 5 years ago, 10 years ago, you would have such a grateful mentality for saying, "Oh, I don't have to be limited. You can free the creativity of the quants that are coming up now, and they can actually focus on their modeling, focus on the prediction and the trading, rather than weeding through the legalese of the data sets because it's a nightmare. I've done it myself so many
That's right.
times.
And we'll have
Yeah.
new regulations coming out. You know, there's a lot of privacy laws that you have to be aware of and things like that that you have to navigate.
Hmm.
And trying to do that by yourself and potentially have your own custom, you know, license agreement with each one of these vendors, I actually think is very risky because the chances of you getting it completely right are fairly low. Whereas in a centralized situation setting where we've got one contract with the supplier and then many with many buyers, we have enough time to invest in making sure that the contracts are correct, and we have a reason to spend a lot of time on that.
Yeah.
I also think that one of the misconceptions a lot of people have about fairly large data is that it all happens on the cloud, and I think that the other 99% outside the tier one players that really have not adopted data or embraced data as much as they should because they can make a lot more money if they do, is this notion that that's something I have to do on Amazon or GCP or Azure, one of the public cloud providers. For sure, we operate in all of those places with our data fabric. But the most meaningful impact we can have for end users is for the have-nots of the world who don't have a cloud computing environment at their fingertips. Maybe there's an IT group somewhere in the organization, but they don't control it. But they still want to get access to a trial for a data set in the next 5 minutes. Well, we can make that happen because we actually federate cloud, edge compute, and on-prem resources, meaning like your Excel spreadsheet on your desktop with our Excel plugin, or if you're running a Jupyter notebook or some other analytics tool on your PC at home. Anybody with an internet connection can access any of these data sets. And that's never happened before. It's never been possible to just seamlessly move between edge compute, cloud, and on-prem resources, and not really have to change your interface for how you get the data.
Where does that lead?
Yeah, go ahead.
where is that going to take us if everybody can access that data? Is that going to expand this quantitative approach?
Well, I
More
think
people will
that
be
if you
able to.
think about it, I think probably most research still probably goes on. If you do the numbers, the number of people doing it, most research probably still goes on in Excel spreadsheets. And so if you aren't delivering data, fairly large data into Excel, then you're not really serving the needs of most of the analysts of the world. And so that's why we created our Excel plugin, which is able to bring in historical data from any of our sources. Plus, it also has streaming capabilities, so you can actually get real-time updating data as it streams in.
Wow.
And so we've seen a huge amount of interest in this kind of meme stock, kind of Wall Street bets crowd. And so one of the things that you get for free with our data fabric is actually the technology to query Wall Street bets, to query Reddits, to look at the sentiment scores on those data sets. It's just a functionality that's kind of baked into our technology that people can use. And so we have a large number of institutional traders who are very interested in looking at those trends and seeing what's going on, and that's just kind of an added benefit to having this kind of federated API that everybody can use.
Yeah.
So we really kind of created the candy store and opened the door to let everybody walk in.
Yep. And I don't think even a few years ago, 10%, even maybe 90% more people have access to that type of approach. It's an exciting time to be involved in it because some of the results that they're going to get when you have, instead of a few dozen small firms, a few dozen of the biggest firms, they're small teams that have the resources to access that data. Now you've got hundreds, maybe thousands more firms and researchers out there taking this approach. They're going to come up with some very interesting results and be probably wildly more successful than they could have been without the tools.
It's a democratization process, and I know Intrinio is a big part of that as well, by making data more accessible, from your site. So we are very eager to continue to cast a wider net, and kind of open doors to access some of these interesting data sets to firms that maybe feel like they're not staffed to or equipped to really go after it. We've made it easy enough now that that's no longer the case. And so a lot of fundamental managers, a lot of firms that are big but not huge, so they're fairly large. They don't have dedicated data engineering teams. They don't necessarily have a big presence on the cloud, and maybe they're even a little afraid of making mistakes. By having somebody who will is not conflicted, who can come in and work with you hand in glove and walk you through the process of taking a trial of a data set that may have taken a year, like it did us 5 years ago, and can tell you, look, if you sign this paperwork, I can have the credentials to you in 5 minutes, and you don't need to learn any new skills, you don't need an IT person, you just need to use your existing Excel spreadsheet. That's pretty powerful. That's not a conversation you or I could have had a few years ago.
Yep. You would need a chief compliance officer involved. You'd have your lawyer over your shoulder, and you'd have your IT department, and you'd be trying to set up a dedicated server. We'll see you next year when we can maybe get access to 1 or 2 data sets. It'd be such a frustration, and it makes so much sense to me why you founded the company, because I'm sure you saw that. You saw that experience before you were able to add all this data layer and build out that candy store. So thank you for sharing it with us. I'm going to be trying to decide now if I have big feet or fairly large feet for, for the rest of the week. It's just been it's just been an absolute pleasure to hear about it. And if what should people do if they want to learn more?
So that we publish a lot of white papers and research. We tend to call those out on social media. You can find us at cloudquant.com, on Twitter at CloudQuant. If you'd like to connect with me personally, I love talking with people about new ideas and new data sets. We're we're experts at finding good matches between people and data, and also helping potential data suppliers to monetize their data sets. We're working with some large banks right now to help them monetize some of their data. And so, you can reach me at jmorganslade on Twitter and Morgan Slade on LinkedIn.
We'll put all those links in the show notes when we publish this episode. But Morgan, just thank you so much for being here and talking to us. It's been an absolutely fascinating interview.
Oh, it's a pleasure. Happy holidays.
Hey, this is Andrew, and I've got Shawn Snyder on the podcast. He is a real-time software engineer at Intrinio. Welcome to the podcast, Shawn.
Well, thanks for having me.
Yeah, our pleasure. Why don't you just start out by telling everybody like your life story in as quickly as you can, like your background and how you came to end up working at Intrinio.
Sure. I'll take the fast version. I joined the Marine Corps after high school in electronics. And so after the Marine Corps, I started into electrical engineering, but then I found software and just rolled right into that and found my new passion and started working at a few different places as a consultant. So I got my licks in there, and then worked at a electronics manufacturer, and then I worked at a 401k provider for small businesses. And I kind of got into writing my own software for algorithmic trading when I was doing some consulting, and that's how I found Intrinio. And so I always had my eye on Intrinio a little bit because I use them as my data provider. And then when you guys had a job opening, I jumped right on that because I love high performance computing. I love making computers work really hard and make them be efficient. When you see a program rev up and use a lot of CPU cycles, to me that's kind of like a race car revving up their engine. So that's what I like doing. I like making computers work.
Yeah, and let's talk a little bit about that, going from being like an Intrinio user to being an employee, because I know you've suggested recently we should do more of that, and you're not the only employee of Intrinio that was using Intrinio data first. So like, did that make it easier for you to know this is the kind of place you wanted to work, or what was that transition like?
Oh, definitely. I was in a lot of the enterprise world, and Intrinio had a lot of more stuff up my alley, where it's doing more, making the code more efficient, more algorithms, more day-to-day differences and challenges. And I thrive on being challenged. So Intrinio really provided that, and it's interesting every day.
Yeah, I love having someone who like knows our API, and you can come in and make a difference a lot, like more immediately, because you already know like our challenges are adding endpoints and like the responsiveness of the API. What kind of stuff have you worked on since you've been here? Like, what are you making high performance?
Sure. When I first got here, jumped on, I think we're doing some stuff with the IEX feed. And then we worked on updating the clients for the options. And the options, if you know, is one of the most high performance clients we have, because that takes a lot of throughput, a lot of CPU to make happen. And so that was interesting to get off on the right foot on that one and jump right into that. Recently been working on adding more fields to what's available for our options, volatility and different calculations, and that's been fun. We've been adding those recently.
Do you think that it's more performant or less performant to use those clients? Like I know you've got SDKs and clients for the options like WebSocket and REST API. Do you think there's a big advantage if someone's going to just write like a lower level connection to that versus using an SDK? Is the SDK slower, or is it worth the ease of integration to use the SDK for like any latency that you might pick up?
I think for the most part, the SDKs are going to be a really good start. If you're looking for the utmost performance, of course, using the lowest level language possible is going to get you the most juice for the squeeze. And so, I mean, that goes for the different, we support a number of different languages. And I would say just among the languages that we make available, choose the lowest level that your dev shop can handle. And then that'll get you off to a really good start. And then usually beyond that, it's more the architecture of your application than trying to min-max the client itself. You can do that. You can certainly do that. Welcome you to look into that. But I'd say for the most part, it's the architecture that usually needs work before you optimize.
Yeah, I am an R user, so everything I do is slow. It's a notoriously like high level slow language. I'm working my way into Python, but maybe like for somebody like myself or someone who's less technical, and I understand why someone would want options, but can you talk about like what goes into making the application more performant? Like, okay, you pick the lowest level SDK you can, maybe like C would be more performant, or C# than like an R SDK. But like, okay, now I'm going to architect my application. Like, what types of things should that dev shop be looking out for so that they don't write code or write an integration that is going to be slow? Like, what should they be thinking about?
Sure. If you're writing a real-time application, there's several things you want to look out for. One of them is anything in your application a bottleneck that's going to basically make it come to a screeching halt? Because if that one part can't keep up with the total throughput of what's expected of it, then it's just not going to happen. Like the whole application is going to fall apart. So on the whole, the bandwidth of the whole application has to be able to support a certain level of bandwidth. Another part is I highly suggest a queue architecture, and especially for options, multiple threads. So your front level threads that kind of interact with more of our code and the lower level code, you want those to be doing as little as possible, and then moving the work to worker threads, and passing that work off via a queue so that the front level threads aren't having to wait on whatever you are going to be doing with your application. So those can keep spinning, keep dumping data into a queue or wherever you're going to do with it, and then let somebody else, you can spin out many servers, many threads, however many you want, to do the work that your specific application does. So do that with queues usually, or event handlers. That way you can have separation concerns.
Right. So, those are great tips. And I think a lot of people aren't used to worrying about that kind of stuff because like a lot of our clients are using like say fundamentals data where it might update once a quarter or daily when end of day data comes in. And so you can kind of afford to be lazy or not to worry about this stuff. But maybe talk just a little bit about like why the options are so different. Like, is it just that there's just purely that much more data coming through constantly that makes you need to be worrying about what your threads are doing?
Oh, definitely. So that's the difference between like a business real time and actual real time, or business developer. where their time frame is maybe 15 minutes, half an hour refresh, where
Right.
real time is sub-second. And so you have to do your thing with whatever piece of data as fast as possible, as soon as possible, like immediately, so that it can keep moving. Otherwise, you're going to get backed up because the fire hose doesn't stop. It just keeps pumping data in. Whereas if you're looking at fundamental data, you're just going to be, ingesting data, doing something with it, and then, putting it somewhere at your leisure. And you don't get that luxury with a real-time feed. You have to be on top of it.
Yep. It's like a sports car versus a mail truck. The mail truck's coming through once a day and dumping off some packages, and the sports car's competing, just constantly going as fast as possible. Makes sense. So you've got a bunch of hobbies outside of this real-time passion where you're making high-performance systems. Can you tell everybody, like, okay, you're a developer, but what are you doing outside of work for fun?
One thing I do outside of work for fun is I like strongman and powerlifting. I recently started the strongman stuff, and it's been pretty fun. So I'm looking to get more into that. I've been training for different goals for a number of years. I've ran a marathon. I've done a bodybuilding competition. Not my thing, either one of those.
Strongman's where it's at.
And I mean, I tried somewhat of a CrossFit thing. Not really my thing either. But yeah, as I learned, if you want to get good at something, you have to train specifically for that. You can train generally, but you're not going to be good at anything specifically if you train generally. So right now the goal is strongman. So that's the goal right now.
And you're being modest about how much weight you're pushing around in this strongman competition. I think I've seen some of these videos where it's like we're talking hundreds and hundreds of pounds. And you're doing squats and deadlifts and the whole range of lifts?
Yes, but I will say I am nowhere near even where I should be if I want to be on any kind of stage somewhere in a professional context. So I've got a lot of work ahead of me to if that's where I want to be.
Yeah. Well, there's levels, right? I've got a lot of work.
Yeah.
If I want to be where you're at, I'm walking around you can take a couple zeros off of what my lifts are. You're still trying to add them on to get to that next level. But I think there's probably some of the same mentality goes into like strongman competition that goes into your job at Intrinio, like building these high performance systems. You're like focusing, right? It's like narrow, like we're going to do this and we're going to do it really fast. We're going to do just strongman and get really, really strong. And so it seems like your mentality is to dive in and go deep instead of wide.
Yes, definitely. That's generally my mindset, and that's why I don't do fantasy football, because that would be a huge time suck. But yeah, I definitely agree with that. It's a lot of it's the time that you spend in it. So the more time you have focused is the better you are at that thing. So if it's real time, you're gonna get exposed to all of the issues and problems and challenges to do with real time. The more you jump into it and get used to what actually happens in those applications. Same with strongman, like how do you lift this without hurting yourself, things like that. So it's time.
Yep.
Time investment.
Yeah, you're becoming an expert instead of a generalist. And I'm going to ask one more question about Intrinio, and then I want to find out, you're in Wisconsin, right? That's where you're working from?
Yes.
Yeah, probably a lot of our team's from Wisconsin, but you're running into some of the Packers in the gym and things like that, right? You're right in the heart of Cheesehead territory, aren't you?
Yes, the gym I go to is just down the street from the stadium. I don't want to make too much of an assumption here. I assume I saw a few players, but I don't want to throw out names just in case it's not true. But I'm pretty sure it was this guy.
Yep. We're like a real-time shop, but I think it's safe to say we're also like a Packer fan shop because like half our staff has wound up being from Wisconsin. I don't know if that's a self-fulfilling prophecy, but major props for Wisconsinites around here.
There's good people that come from there.
Yeah, there are. Definitely. Before I let you go, can you talk a little bit about like what is different about working at Intrinio than other places you've worked? Like, is there a culture difference that you can detect or something special about it that isn't like other companies?
Sure. Generally, in a corporate setting, you have a lot of different levels of developers. At Intrinio, all of the engineers here are top notch, and you can really just depend on any one of them to, be able to speak knowledgeably about a topic, and it's refreshing to be able to learn from people and pick up different languages, technologies, and just improve yourself. Iron sharpens iron.
Yeah, that's great. All right, I'm going to leave it with iron sharpens iron. I think that applies to everything you said today. Thanks so much for being on the show, Shawn, and thanks for keeping our real-time stack moving forward.
Thanks for having me.
I'm going to ramble at you about today. Another word for ramble is a lecture, I guess. Is blockchain oracles and this crossing point that could happen with blockchain exchange technology in the next year. I'm just going to guess it'll take about a year. So what is a blockchain? If you need me to explain that to you, then this is probably the wrong podcast. Intrinio provides cryptocurrency data for cryptocurrency trading, which is related to the blockchain. We used to provide that directly on our API. We have partners for it now, and we're considering adding it again. So you might know what the blockchain is in regards to like cryptocurrencies like Bitcoin or Ether. But that's not what I really want to talk about today. You can probably just Google what the blockchain is if you need to. Or if it's too scary, you can just ignore it entirely. I don't know. It's pretty terrifying for people who are used to paper money, which is what I use now. My family almost disowned me over that. So the blockchain needs to communicate with things outside of the blockchain in order to execute smart contracts. So one of the main uses outside of cryptocurrencies of the blockchain is a smart contract. So if you're going to buy something from someone else and you want a way to digitally verify that transaction happened, you can record that transaction in the blockchain ledger, and then anybody who needs to verify that it happened can check the blockchain and say, okay, we've transacted this this contract between the two of us, and that is one of the many wonderful uses of the blockchain and that technology. And people are using that technology to literally buy and sell property. So like you could execute a transaction to own a share of a home. I learned about that from some of Intrinio's staff who are participating in that. But one thing, the more exciting uses for blockchain smart contracts would be to transact stock. And this is right at the heart of what Intrinio does. We sell market data. We work with all the different big exchanges. And so I want to just talk very briefly about this concept of oracles as they relate to transacting stock on the blockchain. And we have customers that use Intrinio to obtain real-time stock market prices for their oracles on their blockchain. I won't give you examples. There are a bunch of projects out there on different blockchains that are doing this. But what our clients come to us for is they are going to execute a contract on the blockchain. Two people want to exchange a stock between the two of them, and they're going to record on the blockchain. This is a cool, interesting gray area for the SEC and the whole world trying to catch up with this concept. But the problem is that when people traditionally transact stock, they use the national best bid and best offer, which is consolidated stock price from many different exchanges around the United States to figure out what price should we execute that transaction at. And that is done by bringing in what the stock price is at the current moment on a whole bunch of different exchanges and calculating the best bid and best offer across all those exchanges. And that is what a broker can use to transact that stock for their client. If you're going to make that transaction happen on the blockchain, you need something equivalent. You need a source of, well, what is the price of the stock if we're going to transact it between us and record it on the blockchain? Should it be $100, $200, $75? What should that price be? So the current solution for this is to use oracles, which are connections between the blockchain and the real world. And in the case of the oracles that Intrinio works with, we are providing a stock price from like a single exchange to that oracle. They pump that into their blockchain technology and use that information to determine what the stock price should be. Now, ideally, you'd have lots of oracles doing this. So lots of different sources of what the stock price is so that you can have transparency and redundancy and try to achieve something like a fair price for that stock. If you only have one oracle or one source of that data coming into the blockchain, you run into problems with liquidity and the idea that, well, if that source is way off, we don't have any other way to verify that this is a good price to transact the stock at. So all the exchanges that I'm in contact with have some sort of project going on. All the major U.S. exchanges and probably international ones that I don't have a personal relationship with or business relationship, personal business relationship, same thing. They are all trying to figure out how they can use the stock price data that's generated on their stock exchanges to execute smart contract trades, whereas that's normally happening on a server somewhere and it's verified by the exchange. So most stock exchanges are working on this problem and they're trying to be involved with it in one way or another. And they're providing oracle services where you can pull in stock prices from the different exchanges to your blockchain using these projects that these stock exchanges are involved in. Data providers like Intrinio are involved in it. Lots of different sources are starting to come online to make this happen. But what I want to really talk about is the crossing point that we are potentially going to see where the blockchain doesn't need stock price data anymore from an oracle in order to execute these contracts. So I said this might take a year. That's just my personal guess of how long it'll be. And it's a chicken and the egg problem. So let me try to explain what I'm talking about. There might come a day where enough stock is being transacted on the blockchain or blockchains that you could use the transactions that have occurred for a stock in the last, say, 5 seconds or 5 minutes to determine what the stock price of your next transaction should be, rather than using outside sources coming in through oracles. And that would mean that so many people are trading stock on the blockchain that they no longer need a external traditional stock exchange to set the price because the market can be made within the blockchain. That is a radical idea. That is something that the SEC is going to have to address, but it could happen faster than you think, given the way the world moves these days. And so my question to the audience, because I don't have the answer to this, is if anybody's solving this problem or working on it, I'd like to let the podcast know. We can investigate it. We're going to be doing some shows on YouTube more specifically about this topic. But the idea that I'm interested in is, when are we going to see enough bids and asks and folks trying to trade stock directly within the blockchain that we no longer need oracles to execute those contracts? So if nothing else, I've alerted you to something that is going on in the blockchain industry that is heading in a certain direction. The stock exchanges are getting involved and have a lot of interest in what could happen here, but it's an open question. It's an open question of when, I would say when, not if, but when are enough people transacting stock on the blockchain that we no longer need Oracle services in order to set fair prices for those contracts as they execute. And what's that world going to look like? It's going to be a very different place than the finance world is familiar with today. And if you have insights into this, or know of someone that's working on this problem, or have thoughts about how bids and asks could work with a blockchain, we'd love to hear them, and maybe we can get you on the podcast. So there's your ramble. It's an idea to think about, and thanks for listening.